It's Sunday, September 18th. This is Ron Feinstein of New Wave Forecasting. Some chatter about what I see in the price action as of right now and the implications hopefully for tomorrow's trade, Monday, September 19th. And again, we'll be following up. I will be following up real-time market alerts during the session. My theme for stocks last week was pretty much twofold. First being that the big option expiry would keep the market from collapsing. And that second, no matter what happened, that the E-mini S&P would underperform and do fare worse on the downside than the E-mini NASDAQ, and the E-mini NASDAQ would outperform on the upside. The basic interpretation for the price action in the S&P is a triangle, and if in Elliott wave thinking, triangles are always continuation patterns. Edwards and McGee kind of waffled on that a bit. But again, if this is a triangle, probably not going to trade above 2145, and the sellers ought to be coming in right at 2140. That's both the trend line and a 76% retracement. So if there's a play early on the short side in the S&Ps, it's probably right at 2140. And we'll see, 2115, that's a 76% retracement down. If we're in a triangle, it's hard to say how many more days might just go. So all I can say is looking out for tomorrow in the S&Ps, basically looking 2115, 2140 as a possible range. I'm not saying it was necessarily a huge or brilliant endeavor, but I did hit the NASDAQ pretty much right on the head Friday, thinking that the 47.91 level was as good a place as any to make a stand. I think the actual low was 47.88 or something along those lines. 47.88.75. So this is still bullish. I don't know how much more bullish. 48.50, 49.50. That I'm not prepared to say. But unless prices fall below 47.70, 47.60, I just don't see any reason not to favor continuation to the upside in the NASDAQ. But we'll watch this one. If we do pop above 48.25 and then immediately reject and start to head down, that could certainly be a danger sign. So that was one thing we do need to be aware of. We don't want to see the market move up and then quickly turn lower, leaving a bull trap. So if we do push above 48.25 and it doesn't keep on going, be careful. Looking at the 10-year, I think here too we are likely in a triangle trading range. Don't know if there's probably more downside coming near term, but ultimately I believe this should resolve to the upside. So my inclination would be to be buying the notes on weakness, and as long as we don't fall below 130.03, I'd say show me. It's one of those situations where the market should rally, and unless it doesn't, I'm going to assume it will. We're going to likely find sellers again near the 130.24 level. And I would ideally think that 130.08, give or take, should be where the buyers make their stand. So again, near term kind of sideways, looking for a resolution above 131 in the 10-year. Looking at the euro currency, I think we've got a classic setup for a new wave courtesy bounce. I think the market is likely a bust. Clearly, unless we trade back above 112.45, the short-term price projection is 111.40, 111.45. So, there were buyers here right below 112 in the 112, 111.80 zone. I suspect they'll probably be here, but I'm not looking for much of a recovery here. I'd be surprised if we went above 112.20. And I think, again, looking for a move down to 111.50, 111.40 in the euro. Just looks bad. Okay, really neat setup in the crude oil right here, right now at 43.50. I was calling a terminal wave here. The only thing that wasn't picture perfect about the low was that the secondary move did not take out the previous bottom. In Elliott terms, this is a fifth wave failure, possibly, if it's bullish. I think that is likely the case, and that the market is probably breaking out right here. The wave 3 bottom is 43.50, so it's pretty dicey. It's touch and go right at this exact point. But if this is bullish, and I think it is, and we've got a bottom, I think we're going to have a quick move up towards 44.25. So if we rally, it could be 75 cents up. If this is a fake out and this is a wave 4 shaker here above 43.50 the first time, then the next 75 cents are going to be straight down. So this is really an important time to be watching what happens in crude oil. And I don't know if it's a bottom or not, but if it is, we really need to pop right now, right here. And finishing off with nat gas this evening, I remain bearish on nat gas. I think this is the inability of the market to gap higher here tonight suggests that the sellers are still here above 294 in a classic new wave danger zone. We don't really have confirmation of a top just yet. I think a breach at 293 would put things on a more downward trajectory, as we might say, and a bust at 289.5 might really get things going. So again, not a huge amount of confidence just yet, but I like the short side of nat gas, and maybe if we do think crude's bottoming here, that would make some sense since they typically trade opposite. But again, I'd like to see a little bit of further weakness, but certainly with the market opening on its high here and selling off so far, good setup for a bust. So that's it for this evening. I'll be back with real-time updates in the morning. So again, Ron Feinstein, New Wave Forecasting, September 18th, 2016. We'll be back tomorrow.